Hello guys, and welcome to another YouTube video. This YouTube video will be something a little bit different, something that got requested on Instagram actually, which I found a decent topic, and I was having a conversation with this young lad. I say young lad, similar age to myself. He's still fairly new to trading, and he was talking about how he could improve in his trading. So I asked him for a copy of his trading plan, and he said, okay, we'll send it through email. I said, yeah, that trading plan's pretty good, quite solid, well structured, pretty basic, you know, one side of A4 just like mine. So I said, okay, well, what's the problem? Maybe could you show me your journal? And he said, okay, well, I don't actually do trade journaling. I said, okay, that's the problem. You'll have many issues that you're not picking up on because you're not journaling. You're not coming out with the ideas and, you know, your confirms, your entry, which are your entry reasons. You're not stating when you were taking the trade, what time, what, you know, were you going through your daily routine, checking the news, the pre-market. And without going through the before and the after for each trade, there's no way to eliminate the losses. Prime example, this week, I believe I've taken 4 or 5 trades in total. 4 or 5 trades with no losses and pretty much no drawdown either, and perfect, like, sniper entries, as they're called by some. The only reason I've been able to do that is just because I've journaled my trades for so long that now I only take the most obvious setups, which are to do with wick fills and to do with EMAs, and usually pending orders. If we break a major level of like daily support or daily resistance, then I'll be tempted to just drop a couple of pending orders in and just ride them out, because once we've broken a major level, chances are we're going to go to the next, which would potentially be zone to zone as well on a different time frame. So this video will be talking through a week in the life of my trading journal. And essentially this is how I document my trades. This is how I spot mistakes. So if I've won, if I've lost, I go through this, and I pretty much do this every week once I've finished trading, or I do it ad hoc once the trade position is closed. So therefore it gives me the time to take a break in between trades, so I don't trade back to back, because that is obviously my plan, because that I found was making me trade way too often, over trading, and actually I was taking more losses than I should be. Whereas now, 5 trades, 5 wins, done about 20% gain, with again no real drawdown, no real massive risk, you know, just being the normal conservative trader I am. So onto the video and onto the topic. So let's go through the trades one by one, and I'll describe them, and then you can maybe get an idea of how I trade and what I'm looking for. So on screen now you can see trade 1 of the week, and trade 1 of the week was GBPJPY sells. So that is obviously pound yen. So trade 1 of the week, there we go, we can sort of see that. So what was the outcome? Firstly, so GBP sells 10, 15 pips times 3 positions. So a total gain of around 45 pips. Not too shabby. As you can see below, you can look at the entry reasons. So I use the 14, 50 and 200 EMA for confluence. That's the only indicator I use, and I use them because it's a lagging indicator. So actually, it just gives you an idea of when momentum is going to be happening, but it's not 100% accurate, so you can't just rely on that. And therefore, that's why I don't trade the crosses, really. I just trade the retests. Entry reasons for this trade. So the 14 EMA was retested after we found support. So as you can see on screen where my cursor is now, we basically found a couple of exhaustion wicks in that big push down, because we had that looks like a 30 odd pip push down relatively quickly in like 2 candles, or 1.5 candles. So after a big drop, chances are the retracement will also be quite nice, and therefore we actually came up and we retested the EMA perfectly. And in the first scenario, this was the first real retest after the cross. So as you can see, we basically crossed, sort of staggered for a bit, dropped out of that kind of consolidation period that my cursor's over. That's why my stop loss is back up in the consolidation, because if that EMA was broken and we came back up, chances are we were going back up in market structure anyway, so it would have been stopped out for the best. But so as you can see, it also went very well in regards to the timing of the 4-hour candles. Again, something that I trade very frequently, and in like 15 minutes, this is a new 4-hour candle, except I'm finished trading for the week, so I won't be looking at the charts. As you can see on screen, it was 2:45 as when I was taking the positions and when I was actually in the positions, which means that we'd had 45 minutes of the new 4-hour candle, and we'd had a liquidity pull up, as you can see pointed to on here. And therefore, that would give us the confidence that chances are we're going to move back down and fill the wick because we're in very bearish momentum. Of course, that did happen, and I got 10 to 15 pips based on entries because some of them were a little bit lower than the top ones, just due to the spread on GJ, really, because the spread on my broker is about 0.8 pips. I use IC markets at the moment, and sometimes the spread's a lot lower, sometimes higher, depends on obviously the time. But obviously I've taken most of my money out of IC markets, and I'm just going to be jumping on the Forex Family brokerage, which is coming very, very soon. Can't really say too much more because I don't want to give anything away, but I've been asked a lot of questions about it, so when it does release, I will make a video about it. Anyway, so that's trade number 1, a win. Trade number 2. Now, this has got a couple of pictures, so I'll have to scroll down, but this was USDJPY, again sells, and I took 10 pips times 5 positions, so that was a gain of around 45 to 50 pips. Entry reasons here: sold 1-hour resistance. If you're ever on a webinar with Rakeel or myself, you'll always hear us shouting about resistance and support on 4-hour and 1-hour. Usually you'll get a decent bounce from resistance or support, which can be 10 to 15, maybe 20 pips, depending on the pair, depending on obviously the time frame as well, where you'll get your bounce and then you'll get your pips because you've sold at resistance because price is struggling to break through that sort of level. Also, you could say that there was a double top on a 5-minute. I'm not really big on patterns and market patterns like double top, triple top, head and shoulders and stuff. I know what they are and I could spot them in a chart, but I'm more of a caveman when it comes to trading, so I don't really think about it. I just, work off price action, because it's all a variation of price action, patterns and different acronyms and stuff like that. It's all price action based. So yeah, you could say there was a double top perhaps that I've circled. You could also say, and this was one of the main reasons, we were pulling back to the 14 EMA on the 5-minute chart. The reason for this was we had a new 4-hour candle 5 minutes before I was in the entries, which told me, okay, well, we're going to pull back because there will be, and leave a wick to fill, because we're in massive momentum, but price needs to retrace a little bit because market has to move in waves. I know that. So that's why I took sells when we made the little double top, and I took sells at resistance essentially. And also you can see that this 1 hour we pushed up, we essentially filled the wick, and once the wick was filled and we didn't break past it, then for me it was a sell all the way. Then we scroll down into the final picture once the positions had closed, and this was approximately about open positions at 2:02 and closed at 2:09. So that was like 7 minutes I was in my trades, so that was pretty sweet. And I did this live on a webinar as well with Rakeel, Ted, Wakar and Rag. We just called out some ideas and then we just let our positions just run. But like I've said on screen, pips done and dusted. See you tomorrow. And it can be as simple as that. 50 pips a day. Trust me, that's enough. 10 pips a day could be enough. So now we jump on to trade 3 of the week, and this was last night's trade, which was GBPUSD buys. The only reason I would trade this pair, and I did trade this pair, is because every night at around 10 p.m, that's when the new daily candle opens for people in the UK. So I always have a scout around on MT4 on my phone and say, okay, what pairs are in momentum and what pairs have left a daily wick? So yesterday we had USDJPY, GBPJPY and GBPUSD all left pretty substantial wicks, like 30 pip wicks. And I thought, okay, well, I don't want to trade all of them. So which one makes the most sense? So I scouted around on GBPJPY. It made a lot of sense, but the entry price I wasn't interested in. I wanted about 10 pips lower, so it had like a liquidity pull down because often that's what you'll see. So if you look at this candle closer, you can see that we've had a little pull down before we pulled up. Not by a lot, but we had that little liquidity pull down to push further up, to obviously facilitate another wave of bullish momentum. So I decided to go with the most clear setup, and that was obviously GBPUSD. I took buys and took 26 on the first position and 28 pips on the second. Total gain of, again, 54 to 55 pips. So again, that was my day pretty much done. Entry reasons here, so you can see on screen that the 1 hour EMA was acting as dynamic support, which means essentially we were just riding momentum and price was nicely respecting the 14 EMA. On a smaller time frame, it looked like you had like a lower time frame cross, like on 5 minute. But to me, the cross was coming, but I just looked left, as I always do, and said, okay, what makes sense? We haven't closed below support after we had this big like liquidity pull down. Again, you would say this is support. Then we couldn't close below support on this candle, and then this candle. So that said to me, chances are we're not going to be breaking support. So if we're not going down, we're probably going up. Then I looked at a different time frame. So I looked at the daily and said, wow, we've got a lot of bullish momentum. So chances are when wicks are left in momentum, we're going to fill them. So you can see here on screen, massive bullish run. And when I'm going for wick fills, 4 hour and daily or hourly, generally I'll take 75% and close my positions, because I don't want to try and aim for the top of the wick and then that top wick becomes resistance, just like we had on USDJPY here. So this is resistance. So the wick got filled, but it was at resistance, so it didn't go any further. So that's why I target 75% of the wick, because chances are your position will probably close. So I set my stop loss. So I had 8.5 pips stop loss, or 9 pips, from like 130 down to 0.45 or something like that. So just below the last candle. Because if we broke that and we broke support, chances are price is going down heavily anyway. Especially if you look to your left and you had this big wick here of like indecision. And that would have made me uneasy. So I'm happy I just had small stop loss and said, okay, time for sleep now. Because look at the time. It was 11:30. And those who know me, I don't trade Asian. So I'll either use pendings or I won't trade at all. Or I'll have positions running and go to sleep because my stop loss is very small. And yeah, so it made sense for me to take buys. And now the result was when I woke up just to go to the toilet, because I'm a man of routine, and every morning around the same time I look at my phone and it says 2:30, 3 a.m. because I need the toilet. I'm not sure why. It must be the amount of fluids that I'm drinking. But I woke up and thought, wow, price. I looked at the price and I thought, that's either massively broken support or that's gone massively bullish, like 60 pips. And then so I opened the history and I was like, wow, I was not expecting that. I could have probably got another 30 pips on top, but I was thinking, okay, well, I'm happy with that. I've actually done my target for the day before the day's actually started. So at 2 a.m. I was already done for the next day, which was enjoyable. Again, I could have had another position and let it run. But for me, it was just a good risk reward, like 1 to 3 in terms of pip risked to pip gained. And actually, I could be finished for the week at that point. So I was just happy because I was not in drawdown at all. And now we move on to the fourth and final trade of the week. And this was this morning at about 9:45, something like that, 9:30. I wasn't in the position for that long. So this was, and because I said it was done for the week on this last post, I thought, okay, well, actually, I'll take the same lot, but I'll take one position instead of the normal 3 or 2 or 4 or 5. Because I've seen this setup 1,000 times and it was likely and I knew that it was going to happen. But I didn't want to spoil the gain that I'd made at like 2 a.m. So I thought one position, I'll go for 10 pips. And then I'll just call it a week. And then if I lose that and I lose my, and then my stop loss is, I don't know, I think my stop loss was 6 pips. My stop loss was 0.545. So it was about 6 or 7 pips. And I thought, okay, well, it's not really a big deal if I get stopped out, because I'll still be very positive for the day. entry reasons here, we were at 4-hour resistance and we tapped the 200 EMA. Now, earlier in the video, that's why I was talking about the 200 EMA, because it can be used as a confirm on a higher time frame for resistance and support, because often on a 4-hour, you'll come to the 200 EMA, you'll wick, tap that, and then you'll probably fall away based on, or fall, or come back up based on obviously the overall trend direction. But the total gain here was 11 pips. And like I've said, we're at 4-hour resistance. Also looking left, you can see here that I've got like a red rectangle that I quickly drew up on my phone to say, it also makes sense for us to stop here at resistance anyway. 200 EMA is a good confirm. Chances are we're not going to break that. We'll tap and pull away. Then I jumped into 5 minute. And also there was a new 4-hour candle coming. So what happens with the 4-hour? Last 10, 15, 20, 30 minutes, we usually pull back in price, often to leave a wick to fill because we're in momentum, but people are closing orders and prices then pushes back down. Maybe we have a retest on the EMAs, obviously what we call EMA magnets. If you're myself or Car or pretty much anyone in Instagram now, and the chances are we'll retrace, but then we'll go up and fill the wick. So looking at that, I thought, okay, it's a sell. We're at resistance. We're at 4-hour resistance, strong resistance. We're going to be selling, and we're at 200 EMA, so it makes more of a confirm, and it definitely is logical. So I took my position, and pretty much in the first candle, I moved my stop loss to break even to cover my commission. And then I literally just let the trade ride because I thought, okay, well, if I get stopped out, I've not lost anything and I've not gained anything, so I don't really care. And I said I was finished anyway, so I've kind of broken the rules that I had in my mind anyway. So pretty much as you can see here, I've moved my stop loss to break even and to cover the commission, so I moved it like a pip and a bit just so I didn't actually lose anything and didn't gain anything. Then price began to move. I didn't actually have a TP set at the start. Then price began to move in my direction, and we actually closed below the 5 minute 14 EMA. In my mind, I said, okay, well, where are we going next? Jumped onto the 15-minute time frame, and then that's when I noticed the EMA was lagging quite far behind. So I thought, okay, it makes sense for us because we've closed below 5 minute. We're probably going to go to 15. Then that would also make sense in regards to the 10 a.m. candle coming because it's 9:52. So we'd have a 4-hour wick because there's a new 4-hour candle for people in the UK at 10 a.m. Then the next one after that is 2 p.m. An hour after New York Open. So it made sense. So I kept the position running, and we got to 10 pips, and essentially it closed. After I took this screenshot, it pretty much closed, and I got 11 pips with no drawdown. Moved my stop loss very quickly into break even. And then, you know, you visualize the move. I sold resistance, sold a 4-hour resistance and 200 EMA tap back to the 14 EMA. And then again, there was a wick left for the 4-hour candle, which would again make sense with the timing because candle timing is so fundamental. And I feel like people overlook it. So for example, now if I was to jump on the charts in 5 minutes, there's probably a few 4-hour wicks that have been left. Price is probably going to retrace, leave a wick up the top or the bottom of the new 4-hour candle, then it's probably going to fill because if price is in momentum, wicks will fill, just as Raquel says, at Wicks Don't Lie on Insta and pretty much and on YouTube as well. So this is an insight into my trading journal. Pretty basic, nothing too fancy, just screenshots and descriptions that I can happily easily talk about. This is why I break them down on Instagram as well, just so you guys can see how I work and see how I roll. For my students as well as the general public, just because I know if you read the captions of my posts, it would definitely help your trading. So you may be wondering why I haven't traded very much. I actually don't trade that often. I might take 1 or 2 trades a day and I can be finished in 5 minutes, 10 minutes, half an hour, an hour. And I can go about my day, look after my students in my group, go and run errands, go to the gym, go and watch the chase, watch game shows. I can do whatever I want. And that's the point. You need to be paying yourself for the chart hours you put in. So I'm up probably 20% and I've probably done 2 hours chart time in the whole week. I jumped on a webinar yesterday for a while discussing Bitcoin with people in the Forex family, but that was just a bit of fun. when actually the chart time I did was very, very minimal this week for a good gain. And that is for all people that are asking me how I'll work on the broker. I'll be public from day one just to show you track record straight away. But don't be surprised if you see me take one trade a day, or if you're then hooked up and copying me, I might only take one trade a day, or I might take 3 trades a week. Chances are I'll take less frequent trades, but generally I won't lose very often. And when I do lose, so obviously I journal everything, wins and losses, they always go in the journal. And I always look at what happened and why did I get stopped out if I did. Generally, it will be an entry point. It won't be the analysis is incorrect. It'll just be a premature entry, or there'll be a spike with like news because, we've had some Brexit news this week. We've had a couple of missiles coming from Kim. So actually, it's never really the analysis that is too incorrect. It's usually just an entry point. But journaling has made me improve, and now you can see I'm taking pretty much perfect wick entries, which has happened over time. So don't be too hard on yourself or sad that you're not taking the perfect wick entries. That, it still takes me time to get those, and I've been trading for a while now. But so hopefully you've enjoyed this video. Hopefully it's given you an insight into how I trade and why I trade and what confirms I'm looking for. And this is just a week in the life of my trading journal, which started on the 27th of November. And I'm now finished for the week, so there won't be any more entries in there. And I'll be back on Monday for the New York Open. But so, yeah, hopefully you guys have had a good and fruitful week. This week's actually been one of the nicest and cleanest setup weeks that I've seen for a while now. We've also got non-farm payroll next week, so I'll be trading even lighter than I have this week. But so enjoy your weekend. Hopefully you enjoyed the video. If you did, make sure you give it a like, a comment, and subscribe to the channel if you don't already. And make sure you tell your friends to tell their friends, because it's quality Forex info for all experience levels, just as it is in my YouTube header. So that's everything from me, guys. Peace out and trade safe.